Forex trading, how to get started. Forex, Errol, one of those big terms a lot of people like to talk about. Ooh, I'm a Forex trader and everything else. And also some people like, ooh, Forex, that's intimidating. I don't know too much about that. I want to help people get started here, and we can hopefully, with me, Errol, it's like give you all the information about the concept, about the asset class or the strategy or whatever, and get you to a place where it's like, today you can do something. You can at least get started in a small, low risk way with not needing too much of a grand opinion of like, oh, well, I've been monitoring actually the gold prices coming out of Western Africa. And it's like, you don't need to know everything about everything. We're going to get you on board here with foreign exchange, teach you a little bit, and then get you to something that's low risk, a good starting place based on your general demeanor, your general vibe. But really quick, before we do get started, have you traded Forex before? And what is essentially like, what does Forex mean to you, I guess?
I understand it's a foreign exchange market. I started learning or hearing a little bit more about Forex when I first got into college, actually. I would hear about some college students kind of just talk about Forex here and there. I was kind of more of the stock market. So I was kind of like the stock market, kind of, but a different world, but you trade currencies. So never really had my hands on Forex at all, though.
Awesome. That's honestly a great place to start because it is kind of like its own stock market. And what's really nice is that it's like completely uncorrelated to stocks. Like I've shown this so many times, and it's one of the great things about foreign exchange. And like you say, Forex is just the foreign exchange market. It's a catch-all essentially for technically Forex trading is spot currency cross trading. So like trading the spot market or the cash market for pound versus US dollar or euro versus US dollar or yen versus US dollar or euro versus yen or pounds versus Canadian dollar, like all this different stuff in there. But what's really nice about it, don't get too caught up in the spot or cash market versus futures. Futures is definitely where beginners tend to start because you have smaller versions of futures and you're likely already eligible to trade futures. To get into a spot Forex market, you have to usually open a different account, and it's kind of a pain there. But it's a really cool, if you want to go that deep, it's really cool and you should go that deep. But yeah, foreign exchange, essentially just this catch-all for this other, like Errol says, stock market. But what's really nice, Errol, is a lot of times you'll find like, oh, I didn't know that the consumer staples sector that existed. That's like a whole different stock market. That's awesome. That's this whole different world for me to jump into. But those stocks are correlated to the other stocks that you're trading. Here, what's really nice is that the value of the pound versus the dollar or the euro versus the dollar or yen or euro versus yen or what have you, largely independent of the equity market. That's pretty nice diversification, right?
No, yeah, that is nice. And again, it does kind of just feel like a whole nother kind of world. So yeah, definitely diversified.
And instead of earnings, you have like central banks. The last night, a big downdraft today, as you can see that purple line, the yen really getting spanked, especially in the last 24 hours here, because the Bank of Japan came out and they said some stuff that wasn't great for their currency relative to all the other. So like it's got stuff like earnings and everything else. It's just a different world in there that's diversified from those stocks. And this is the thing, Errol, that I think breaks a lot of people is like, this is the foreign exchange market. This is what it means. You got central banks and inflation numbers and these different types of earnings and everything else. But when people see these different cross markets and the fact that when I'm trading that yen versus US dollar, I'm also formulating opinion on the complexities of the yen and the complexities of the US dollar. And there's literally hundreds of these cross markets. It can be a little too wide for everyone. It's like if you were an alien and you just got down here and I showed you what a public stock was, what a public company was. And then I was like, and guess what? There's thousands of them. So good luck picking one and good luck getting started. A good place to start is just the US dollar against a lot of those markets, kind of like an S&P 500, right?
Yeah. Yeah.
You got something on the US dollar market here. You can see that this action to the upside here is apparent is really just like an amalgam of these three markets in the opposite direction. Just like if I were to show you a chart of, here's the performance of Apple, Microsoft, and Amazon, and then here's the S&P 500. It's just a basket. It's the same thing, right? Like Amazon.
So you have to go stock picking on yourself.
Exactly. You don't have to do the stock picking and formulating an idea, but also something that is, and I want to get your take on this because I'm sure this kind of rang true to you at some point, is that like the performance in the euro doesn't then affect the performance in the US dollar like 10 minutes later. A lot of people, that's hard for them to kind of grasp, especially in interest rates where they're like, oh, bond prices are going higher and then yields go lower. It's the same exact thing that's happening at the same time that, euro, yen, and pounds are moving lower and dollars are moving higher. It's just a different way to look at it. Similar to that S&P. S&P is going higher today because Microsoft and Amazon and everything else are going higher, but they're the same thing. It's not a cause and effect, right?
Right. It kind of just boils it all into kind of a nice basket.
Exactly right. Like it is at the end of the day a basket here, and you've got those big players like the euro, yen, and pound, but you've also got Australian dollar, Canadian dollar, and the more names that we added here to make the small dollar product, the greater diversification it gets. It's like if you trade the Dow Jones, for instance, it's 30 stocks. And if Boeing, has earnings today, that's one of the stocks in there, then it's going to really move just that 30 stock index. But if you go to the S&P 500, any one of those stocks doesn't move it too much. So we diversified it, made it really simple for you that it's just like you've got the US dollar and how it's tending to do. If you think US dollar is overpriced, you sell it, and if it is overpriced, it should come down, and you don't have to depend on one particular relationship. And what's really nice here is this is a product that on an average day moves about $50 or 50 cents in terms. It's a $100 multiplier, just like 100 shares of stock. But you can see here recently we're in the midst of an outlier here, causing you to potential. I mean, if you're a contrarian, you're probably getting on the short side of this. If you're following trends, you're probably getting on the long side of this. Same as any other stock market or whatever. At the end of the day, it's just price action, right?
Yeah, 100%. I know people will get long and things like that. It's just, again, looking at moves like this, it's like I can make a little money getting long, but just feeling like you're chasing those tops sometimes, but
and it's worked until now. But yeah, I totally agree with you. I'm on the short side of this, and it is something that I didn't want to get into here in the getting started section necessarily, but this is a market that usually is ripe with mean reversion. You can see that US dollar gets hit in 2017 and 2018. It bounces back in the later half of 2018 and on into 2019. You see the pandemic highs that we're now actually, if this was updated, we're at these highs. It comes off right after those highs. So mean reversion here, you can buy or sell the futures if you want directional exposure. You just sell those futures if you think it's going down. You buy the futures if you think it's going up. But you can also use options for some of that direction, but also getting some premium on top the same way that you would, it's like, oh, I could buy Apple shares, but I could also sell a put in Apple, or I could buy a call on Apple. It's the same, just different risk dynamics and different premium on top. And for instance, I have actually, if I go to some of this stuff here, you can sell the futures outright and you'll make $1 with every penny that this market moves lower, or I've got a mix of both going on, or you can sell a call if you want to get short that way, and you've got a higher probability of profit, 86%, and you've got a lower buying power, but you also stand to make less money if the market really reverts to the downside. All that stuff checking out, right? Just like getting started trading really any asset.
Yeah, I mean, look at that buying power, $58. You can't beat that.